Good afternoon. Welcome to episode 82 of UncommonCents. Great to be here, Dean Holmes, with Abhi from Risk Advisory Hub. Good afternoon. How are you, mate?
Good, Dean. How are you going? Thanks for having me on.
You're very welcome. So today we're talking about cyber insurance and cyber risks. So a couple of guests have been on the podcast recently, namely Fraser Jack, in relation to getting your cyber house in order in terms of having great cyber policies. One requirement, obviously, that we want to talk about today is making sure that we've got great cyber insurance, just to take up to the fact that if something goes wrong, that we've actually got some backup here. So we're just going to learn a little bit about the good and the bad policies, the war stories, and the process in relation to how you have to claim. So let's dive in. Tell us a little bit about your business and what you do day to day.
Thanks, mate. Yeah, so I started Risk Advisory Hub about just under 3 years ago, focusing on financial lines insurance. So that's mainly your professional indemnity insurance, cyber, directors and officers. And I really enjoy working with financial services firms. I understand their business and can tailor policies to meet their requirements, and obviously policies that are compliant with the reg guidelines. So yeah, mate, it's been 3 years. We focus mostly on PI, but obviously increasingly focusing on cyber insurance for financial planning firms as well. We've seen an uptick in inquiries coming through, and I think it's important to tailor policies that actually cover the risks that planners face and deal with.
Yep, absolutely. Okay, so first and foremost, the question of should I have a cyber insurance policy? PI is a must-have, obviously, in terms of the ASIC legislation. Cyber insurance, optional or required, do you think?
Look, I think it's definitely required because ASIC hasn't prescribed anything specifically, but place a massive importance on protecting your client data, and financial planners deal with a whole bunch of sensitive information when it comes to their clients.
Yep.
And if you're not protecting that information to the best of your ability, you could be caught up with action taken against you by the regulator. So in my view, it's not just a cyber policy, but you need to be spending time on fixing your cyber posture, understanding what it looks like, engaging an expert to come in and create the processes and the business continuity plans. And the cyber policy really should be a last line of defense.
Yep.
And when you call upon it, it should respond and do what you need it to do.
Absolutely. And so we love that, like, obviously all advisors are in the business of insurance, a different kind of it. But we always have said to clients over the past that all insurers pay genuine claims. And what we need to think about as we go through this process is what are all the things that potentially we should have done, as you were hinting at there about getting your cyber posture up, which is a good thing to think about. I imagine that's standing up straight and strong in terms of your business. So getting that cyber posture, but then having the last line of defense being the insurance policy if anything were to go wrong. And so before we jumped live, we were talking about a bit of the uplift over the last 24 months that you've had. Tell us a little bit about that. So that's new clients coming to you with never having insurance up until this date.
Yes, mate. Look, I think in general, because of everything in the media with cyber attacks and things going wrong and bad publicity for some of the licensees, all other licensees are taking this a bit more seriously. So what they're doing is engaging firms to fix their cyber posture and pushing their advisors a little bit stronger to go and get the cyber insurance, whereas previously it might have been a little bit more relaxed. So yeah, look, we've definitely seen an uplift in corporate authorized reps and licensees looking at their cyber cover and really making sure that it covers them.
Yep, absolutely. And so the element there that you were hinting at there is that we've got licensees that might have a cyber policy. And then so one of the things that we all have to think about is if our licensee is telling us that they have a cyber policy, that doesn't necessarily mean that it's going to cover the corporate authorized rep, the car that we're talking about, and a breach within your business that's unrelated to the licensee. And Can you tell us a little bit about the policies that might be covered by a licensee, that not naming the licensees in particular, but how do I know whether I'm going to be covered by the licensee policy? And is that a good thing?
Yeah. I guess it's best to not guess, right? It's common for licensees to extend professional indemnity cover to the reps, but A lot of reps just assume that the PI policy is probably going to respond to some sort of a cyber breach and the licensee is going to sort me out if something were to happen. But that's not the case. You are most likely covered under the professional indemnity policy that the licensee purchases, but not the cyber policy unless it's specifically designed to also extend to the corporate authorized reps. That's quite rare. I've seen many policies in the market that do that. We can structure that and it's available, but then it's also a conversation about whether it's the best fit for that licensee and the network.
Absolutely. So more than likely, you need to have your own policy, which means that you can control the terms and conditions of that policy. And obviously, you're paying for it at the car level directly.
Yeah.
What's the most likely claim that you've seen or hear within the industry that happens to a financial planning business?
The most likely claim is a social engineering fraud claim. So this is when, let's say you're a practice with about 5 or 6 employees and one of your clients emails you and asks to change bank account details and then to transfer funds into that account. You do it because everything looks okay. It looks like the client's email, the emails in the client's tone that you've dealt with for the last 10 years. So you then send 100 grand and you realize that it wasn't the client and you've sent it into a hacker's account.
Yep.
You try and claim under the cyber policy and the cyber policy comes back and says, sorry, but it's not covered because you've willingly transferred the funds. So what you're caught by is a voluntary parting exclusion. So if you've voluntarily parted with the funds, the policy is not going to cover you. So that's where you need a social engineering fraud extension on a cyber policy to specifically address that exposure.
Okay, that example is that the emails keep coming into my business and it's my favorite client, Mary. She's asking for money. We organize the transfer because Mary often does that. And so this means it's very likely that the client has been hacked in their world. Okay. And so the hacker's in their world, which is how they know to email our financial planning business from the client's email address and things like that. But what happens, I can imagine, when there's a loss is the clients love to blame everyone for the loss. So whilst they're responsible and theoretically needing to keep their client house in order, what you're saying is that they'll still try to claim against us because we sent the money.
Definitely, because we were responsible for the money. And there's checks that we should have done. And in these scenarios, it's usually just the transfer happening without you double confirming that it was actually the client that requested the transfer. So it can be stopped by just a phone call to the client, to Mary, just asking whether or not she sent the email and just to confirm the bank details back.
And so there's been a lot of cases around this with, I would call out the conveyancing world as the ones that make the Channel 9 news anyway, of the home buyer who transferred their 20% deposit to the lawyer, not realizing that the lawyer had been hacked and that account they transferred it to wasn't the lawyer's trust account. And so once again, we're in this situation where that client or that human has willingly participated in the social engineering by sending the money.
Yeah, exactly.
Yeah. Okay. So we need to be cautious around that. And this is the word multi-factor authentication is what we know as when we use our mobile phones to log into something. But the element of multi-factor authentication is actually much broader, that if someone requests something, using a different factor, i.e. phone calls is the most often, to check in as to whether the client's made that change. Okay, so that's social engineering, and that's pretty common. And so in terms of what we've learned in the past with Fraser Jack, obviously we want to have had all these roadblocks up to stop this, or checks and balances. But then say it accidentally happened, I've got your policy and we've sent the $100,000 to the hacker. We've realized this at, say, 4:59 in the afternoon. What's the next steps that we have to be aware of in relation to doing something?
You should have a business continuity plan or an incident response plan documented. And within that document, you really should have, my numbers, I'm going to answer the phone, but you're probably better off calling the incident response hotline that your insurer provides. Because they're 24/7, they respond, come in, tell you what to do, try and minimize the loss. So that's a number that's key. And more often than not, it's on someone's computer. So you're better off having it documented outside of your computer that's been hacked or being held for ransom.
Yeah, so everyone should know who their insurance company is as an action item from today. Everyone should know this particular phone number of the incident response and probably their policy number or something like that saved in the phone as well would be really useful because you're right. This particular social engineering one, perhaps you still have access to your systems at that point in time, but you might also want to be shutting down your systems because you don't know what's happened and you
Yeah.
need to make this particular phone call to the provider at the end of the day. And so we call the incident response team. And are we paying for that, or how does that work in terms of the policy typically?
So it depends on the policy you've got. Policies usually carry an excess. It can be as low as $2,500, and depending on your size, much bigger than that. Usually, if you've selected a good insurer, you shouldn't be paying an excess for the incident response. You really only should be paying excess if it's the regulator taking you to court over improper management of client information. You pay an excess for defense costs or a judgment awarded against you. And that's something a cyber policy can also cover.
Yep. Okay. Yeah. So let's talk a little bit about that just so we know what can be covered by the cyber insurance policy, because I think this is where advisors sometimes think that they're protected by PI as opposed to cyber insurance. So without going through the whole PDS that we know everyone reads in detail, what are some of the things that we're covered for in relation to a great cyber insurance policy?
Yeah. So I think the key is, so as I mentioned before, financial planners deal with lots of sensitive information on their clients. And Australia's got really strict laws when it comes to how you deal with that data. And if that data is breached, for example, you've got costs to notify each affected customer. On average, that's about $200 per record that's been breached. Let's say you've got 1,000 clients, the numbers quickly add up. So what hackers usually tend to do is get into your systems and hold that information for ransom. And a cyber policy can come in, negotiate with the hackers and pay the ransom where the law allows to then get the data released. So you're not then dealing with the regulators or the breached information.
Okay. And what's the paying the ransom? I can only think of the movies in relation to human kidnapping. Is that that's the likely goal of the hacker? They're not simply looking to get the information to then use it. They're just looking to get the information to try to seek a ransom.
Yeah, it's a business model, right? There's a lot of these guys running large, profitable operations outside of Russia, just collecting ransoms. And there's been talk about banning ransom payments. And the argument is that it's probably going to put a stop to the attacks themselves, but that hasn't happened yet.
I can't imagine that they'll just change their business model if we change our business model of not paying and things like that.
Sure,
and so that decision is made with the insurer or actually potentially even by the insurer, that they're actually working on solving this with you and for you.
correct. But usually there is ransomware cover on the policy up to a certain limit. And it's usually the policy limit. So if you're buying $1 million policy and the ransomware limit's $1 million, you've got up to that amount for that payment to be made.
And interestingly, the hackers have got access to your policy because they've hacked your systems. So they probably know the limit anyway.
They know what they're getting.
Yeah. So they know what they're getting at that point in time. Okay. So being hacked and taking financial data is one thing. Obviously, this financial engineering is another thing. What about when the government starts to look at us for the mistakes that we've made? Does it cover how we have to deal with the government or any fines that we have to pay? How does it come in and help us there?
Yeah, so you've usually got cover for regulatory action. And this is when the government comes in and takes you to federal court and for not doing right by your client. So the policy can cover the defense costs and costs associated with the judgment. But I think more importantly, if it all gets out into the media and there's bad publicity about you not operating a firm that puts client data security as fallout in terms of just loss of business from people not wanting to deal with a reputable firm, what a good cyber policy can also do is come in and deal with that reputational harm and mitigate that side of things as well. So you've got public relations costs that will engage a team that will come in and fix your reputation essentially, or not have it get to the stage where you've got 15 articles about you on LinkedIn.
And this is the part where, whilst you're at the back end of the process, when we reflect on our time with Fraser before, is that you have to have done all of this thinking before the claim. Like the stress that you're on at the particular point of the event happening, not the claim happening, and then having to also write a media release or write these things to a client to let them know that you might have had a breach. We have to be quicker and have pre-prepared all of those things.
Yeah. And more often, you're not really equipped to do all of that, right? Because you're stressed out about the claim, you're stressed out about your clients calling you and yelling at you for what's just happened. So you really want experts that you can call upon that will help you through the process.
Absolutely. And so there's the current most recent famous data breach is the Qantas frequent flyer data and things like that. I'm not sure. Was your email address part of that?
I don't think so, but I've got to double check.
Oh, mine was. So I've received the email, and it's interesting because some people start to become numb to the number of cyber attacks. And so we've spoken before about how individuals can search their information to see if it's out there on the dark web and things like that. But also, if we use Qantas as the case study, is that no firm is impossible to hack. And this was a version of social engineering at the end of the day that got them into that particular database. And so is Qantas claiming on their policy, do you think, or do they self-insure? What do you think they're doing?
Look, very likely, depending on the loss amount, but I'm sure Qantas would carry a massive excess, probably up for a bit of cost before the policy responds.
Yep, absolutely. And so when it comes to getting a policy with you and the work that, like when we started to go through the policy review and rollover process, knowing your systems, and obviously you've done some checks and balances on the website and things like that to see the level of sophistication, I suppose, that we have. Talk us a bit about what we have to do to get a policy in the first place.
Yeah. So mate, it starts with a chat like you and I had. Firstly, just to understand what your needs are, what your business looks like, what the structure looks like, and then figuring out what limit would best suit your business, best risk. And that's usually correlated with the amount of clients that you deal with or the amount of personal data that you deal with. But on average, for a corporate authorized rep, it sits at about the $1 million mark, which seems to be quite sufficient. And then we go through the fun stuff, the underwriting information, what controls you have in place. Are you using MFA to log into portals that access client info? And if you've got all of that in place, what we then do is we work with the insurer to assess your current cyber threat. So we look at whether or not there's any vulnerabilities, and I come back to you with a report and talk you through what to address, what to fix, which usually also has an impact on the cyber premium if you fix those vulnerabilities. And once that's all sorted, we negotiate a quote and put a policy in place. We can usually get something sorted within, say, 72 hours to max 2 weeks.
Yeah, very quick. And so that, just going back onto the things that you said there, the coverage of $1 million, is that, as a guide, is that going to cover a business with revenues of $1 million? What's the $1 million equate to? Is that a turnover of $1 million as well, do you think?
Not necessarily. You could be turning over 200 grand, but $1 million is what you need to adequately insure yourself, because you might be dealing with, say, 300 clients. And it really just depends, right? We'll have a conversation with you and understand the risk and understand what worst case scenario could look like and insure for that amount. It's always better to slightly over insure than to under insure, but you also want to make sure you're not paying premium for something you're never going to use.
Absolutely. And typical excesses in your world, what's that looking like?
On the smaller end, it's about 2.5 grand. It can go up to 15 grand.
Which seems reasonable. At the end of the day, we want to minimize the chance that we're claiming on any insurance policies that we have. But this is one that it's more and more likely that we need to prepare for it, which is the message that we're trying to get out there, is that the preparing for it is being cyber fit or having great cyber posture. I will be using that one going forward, and then having the cyber insurance as a backstop so we know what's going on. One of the lessons that we learn as we do research in this area is that most likely, unfortunately, if you are being hacked, the system has been compromised for a longer period of time than what you realize. And keep putting the barriers in place and making sure that those barriers are still up all of the time is so important, because we can find ourselves at the smaller business level. We don't always have the same resources to be thinking about these problems. And the numbers game is that if someone can get access to client data on 300 clients, that's actually a good day's work for a criminal, but a good day's work. And so it's not fair to say that being small means we're flying under the radar anymore.
No, 100%. Hackers would usually look at smaller firms as having less security and easier targets. So you're probably more vulnerable than a much bigger firm.
In terms of leaving the keys in the car or leaving the back door open, at the end of the day, we've got to be aware of those things and doing the right thing to get it closed up at the end of the day.
Exactly.
Yeah, magic. Any other tips or tricks that you want to leave us with?
Mate, just have your antivirus up to date.
Don't naively click allow and yes to everything that comes up on your screen. And another good thing is to actually observe your staff from time to time logging in, because sometimes, this whole thing about you tick a box that says save my password, or you tick a box that says remember my details for 60 days, these type of things, sometimes we click them and we wish that we didn't click them. Maybe IT should turn them off, but just observing your staff in terms of how they access the systems as well, because whilst you might be hyper vigilant in the way that you're doing things, it doesn't always translate to the rest of your team without training to make sure that they're actually doing the right thing as well. The social engineering example is that it's probably gone through a couple of people before the mistake was made, and the frontline staff, whoever they are, the ones that need to do the front end triaging of legitimate versus illegitimate requests at the end of the day.
Yeah, exactly. A good example comes to mind. We had an accounting firm that recently had a social engineering loss, and they had done training 3 years ago around the risks of social engineering. They've done that more often, the loss probably wouldn't have happened. So
yeah, very good lesson. So people can find you on riskadvisoryhub.com.
Yeah,
we'll put all the links under the notes here as well and beyond. But amazing to have you on board, just to bring up and remind everyone that this is an insurance. This is a risk that we need to be aware of. We need to mitigate that risk with great cyber policies first and foremost. We have to be cyber fit in that regard. We have to have the brick walls up to make sure that we've got the technology helping us as well. We need to train the humans, which we just spoke about there, in order to make sure the humans don't breach us. And then finally, if all things get broken down, making sure that we've got a cyber insurance policy and an insurer that pays genuine claims for the genuine risks that we insured for. So thanks very much for joining us and teaching us a little bit more about cyber insurance.
No, thanks for having me, mate. Thank you.
Brilliant. Thanks, everyone. That was episode 82, and we shall see you next time.